Justin, thank you very much for joining us today. How are things in Southern California?
Things are good. Yeah, we had a pretty steep spike in temperature a couple of weeks back, or I guess that was last week. It was maybe about 10 days of a heat wave, but it went from that instantly into autumn. So today it's low 70s and partly cloudy, just gorgeous.
Yeah, it's hard to believe we're already into Q4. Justin, every time we speak, there's a tidal wave of positive news for nuclear power, but given you're based in the US and the US has the largest nuclear fleet in the world, I want to focus on what's happening in the US and more specifically with government policy. There's been a lot of it put forth by the Biden administration and also many different states. And so I want to focus on this. And why don't we just begin with the Inflation Reduction Act, which was introduced by the Biden administration in August. And within that act, there was also $369 billion allocated toward the clean energy bill. Can you just provide us with an overview of what exactly was in that and how it's going to benefit the nuclear power industry?
Sure. Yeah, this was definitely a significant piece of positive news over the past couple of months, and it's the United States has not built new nuclear in a long time, with an exception of the Vogtle plant, which is set to actually come online finally next year. But with that exception, there's been essentially no new construction of nuclear for almost a couple of decades at this point. And so the primary focus for nuclear advocates in the States has not necessarily been in the massive uphill battle of trying to influence new builds, but to extend the lives of the existing fleet. It's about 20% of the electricity grid in the United States, so it's an absolutely vital source of electricity. And of course, it's base load and it's carbon emissions free, et cetera, et cetera. And so to that tune, the stage was sort of set a number of years ago with the Section 232 petition that was filed by UR Energy and Energy Fuels, which they were requesting, I believe it was 20% of the nuclear fuel requirements for the domestic utilities to be like a quota. They would have to buy that from a domestic source. That Section 232 essentially got shut down by President Trump, but he did implement a nuclear fuel working group, which then spent the good part of the next, I think it was 9 months, looking more deeply into the problem at the time, which was heavy reliance on foreign sources of uranium, more specifically Russia or Russia-influenced locations. That nuclear fuel working group came out with a number of recommendations. One of those recommendations was to establish a uranium reserve, federal uranium reserve. There were a couple of other recommendations for supporting the nuclear fuel cycle in the United States, but it just got totally washed over by COVID and election madness in 2020 and just got really put on the back burner. Nobody was even talking about it or thinking about it a couple months after he came up with that conclusion, or the nuclear fuel working group did. But it at least set the stage and made it public and kind of more well known that the fuel cycle in the United States is a problem, with 20% of the grid producing essentially zero of the necessary element to create that energy. The mined uranium, which I think this year there's maybe going to be a few 100,000 pounds of mined uranium in the United States, and they're going to consume about 47 million pounds of uranium this year. So that put it at least on an alert, let's say. And now with this energy crisis and the particular bifurcation of the market with the West, essentially the US and the EU, we're talking about the US here, trying to reduce and eventually eliminate its reliance on Russian uranium. This Inflation Reduction Act finally passes. It has a number of elements from the Build Back Better bill that was shot down. But one of the elements in there is support of nuclear and a recognition of nuclear as essential clean baseload power. And so the biggest piece of this that supports nuclear is a $30 billion tax credit over 10 years for nuclear energy production. And so nuclear operators are going to be able to apply for this tax credit and receive some financial support for the recognition that they are producing clean energy. This is a pretty big deal. A quick back of the napkin analysis says that this should be sufficient funds to keep any reactors that are on the quote unquote chopping block due to profitability online. So the Diablo Canyon plant in California was just had its lifetime extension for 5 years. It was set to come offline in 2025. They extended it to 2030. It's a start. I would love to see it extend beyond that, but hey, it's something. This is being extended by a bill that was proposed and then eventually passed by the Democrat majority legislature in California, signed by the governor. And I believe this is going to be a loan to PG&E in order to maintain the operation of the plant. So I don't think it's had any influence from the Inflation Reduction Act necessarily directly, but obviously going forward, it'll have that support, financial support from the government. One of the big things that happened right after this act passed was the Palisades plant in Michigan was shut down, and that was a scheduled shutdown, scheduled decommissioning, which was really kind of a bummer. There was, there's a number of elements of maintenance that the operators, which is Holtec, apparently did not want to front the money and put up that expense because the plant was not profitable enough to justify those maintenance expenses, and nobody wanted to buy the plant. None of the other operators in the United States wanted to take it over, so they shut it down. And about a month, 6 weeks after it shut down, after this act passed, Holtec is talking about bringing it back online. And because this is actually going to support, this Inflation Reduction Act is going to support that plant to continue to operate. So that's a really cool piece of news. Yeah.
And you mentioned earlier that the U.S. consumes 46 to 47 million pounds of uranium annually, but yet it actually produces very little. Where does the U.S. get its uranium from?
It gets about 20% of its enrichment from Russia, so it's enriched uranium from Russia. A lot of the U3O8 will come from Canada, Australia, Africa, and Kazatomprom, Kazakhstan. Primarily, I would say Kazakhstan is probably the biggest. Kazakhstan and Canada would be the biggest providers of U3O8 for the United States.
So something else the Biden administration did recently, it requested an additional $1.5 billion for HALEU. Can you just tell us what that is exactly, and what does this mean to the nuclear power industry in the U.S.?
Sure. Yeah. So this is in addition to the funding, and there was some funding in the Inflation Reduction Act. I apologize, I don't remember exactly how much it was for support of enrichment in the United States. And enrichment really is kind of the pinch point because the United States has a very small amount of enrichment. They have, I think, 4.7 million SWU out of the almost 26 million SWU in the West, which is only 40% of global. And it's not enough SWU to provide all the enrichment that the United States reactors actually need. And so, and they will have conversion again when Calmerdine's Metropolis plant is restarted next year. That's in process right now. So, they need to expand enrichment. So the funding, some funding allocated Inflation Reduction Act, and this additional $1.5 billion that's being requested is for the DOE to actually buy enriched uranium, and they want to buy specifically low enriched uranium and high assay low enriched uranium, the HALEU. The HALEU would be a higher enrichment than LEU, so that would be anywhere from 5 to 19.9% enrichment, and that would primarily be for the proposed adoption of advanced nuclear and SMRs in the United States. And so right on the heels of that request, and so basically how that would work is the DOE would actually be buying enrichment, and as a consistent buyer with funding from the government, that would support the production of HALEU in the States, and they would have to buy it domestically, right? So it's not just to buy it from wherever, it's actually to foster an entire nuclear fuel supply chain in the United States, and that would be that's intention, that funding. But right on the heels of that request was a report that came out of the DOE, the Department of Energy, that they looked into all of the existing operating coal plants and recently shuttered coal plants to determine how many of those would be viable for small modular reactors to replace the coal production. And this news is like, it's so incredible. I mean, really it is. This is not something that any uranium investor or nuclear investor would have dreamt of as even a remote possibility, even 3 years ago or even 2 years ago. So the fact that the federal government, not some kind of nuclear lobby, not nuclear advocacy groups, the actual government of the United States is saying, hey, these SMRs are something here. Not only do we want to secure a reliable fuel supply to power them, but here are all the viable options for implementing them where there's an existing grid and we can shut off the coal plant, reduce a massive amount of emissions, and implement SMRs. If there was a small modular reactor, even a fraction of a gigawatt, right? So most large reactors are right around a gigawatt, and SMRs are typically, they can be 1 or 2 gigawatts or 1 or 2 megawatts, all the way up to maybe 300 or 400 megawatts. But even a smaller SMR would plug into where all of the existing coal plants right now, that would more than double the uranium demand in the United States. And so this is it's a big kicker for this thesis that is not something you can hang your hat on yet. It's not something you can model out demand towards the end of the decade yet, but it has the potential to be a serious demand addition to these models and to this thesis. SMRs could potentially be the buyer on the margin, 5 years from now, and could help to sustain a bull market for the commodity, if not send it to higher prices. So it's very, very good to see. Now, with all of that said, there's a few key Democrats that are attempting to block that funding request, because essentially saying, well, why do we need to spend this money on this when we can just get it from Russia? This actually came from a number of Senate Democrats. So we'll see if that funding comes through. But either way, they're doing what they can to move in that direction. That's really positive.
So Justin, I want to play devil's advocate now, because you just listed many positives about what's happening in the US, and we could spend another hour on what's happening globally within the UK, within Japan, etc. But yet the uranium price, spot uranium specifically, isn't really moving the way you would think it would with all this positive news. And so we're trading in the high 40s or low 50s, but I guess my question to you is, why isn't uranium trading at 60, 70, or 80 bucks? What is it that we might be missing?
So the spot market is trading on vapor. All it takes is one seller that is either motivated or price insensitive, and essentially, no real buyer demand in the spot market. And so the utilities are essentially staying away from the spot market. At least at the moment they are. And the reasoning for that is the buying of pounds in any sort of volume really moves the price up quickly. It's basically universally known at this point that the spot market is quite thin. There's a decent, a couple million pounds a month that are produced by primary producers that are price insensitive sellers, let's say. Primary one would be BHP from their Olympic Dam mine. Uranium is a byproduct of copper and gold production there. And then there's some other, the Uzbeks tend to sell their uranium at, market prices to traders, and they can kind of arbitrage that. So there's a little bit of pounds that come in and out of the market on a monthly basis, but really the spot market has been more of a financial player's story. And with, risk being off in the markets, Sput has purchased 1 million pounds this month so far, but the past 3 months, they've been almost exclusively at a discount to their net asset value. They've been really unable to raise a lot of money and therefore buy a lot of uranium. But the other side of the coin is that there's a complex set of variables right now that are setting the stage for a very significant contracting cycle for utilities. And this is really what moves the needle in terms of pricing. So utilities, their primary way that they procure uranium is through long-term contracts. And over the past decade or so, they've been able to top up inventories and avoid coming to the table with producers like Cameco by purchasing the spot market, by purchasing what are called carry trades. Basically, they're securing a midterm contract with a trader that will then go out and buy it on the spot market, and they'll add their profit margin and the cost of capital and interest rates and whatever. And that's what the utility will secure for that midterm contract. And the carry trade did a lot to work through a lot of above ground mobile inventory over the past number of years, but it also allowed the utilities to access that mobile inventory through these midterm contracts with carry traders and avoid long-term contracting with primary producers. So right now what's happening, and this is especially poignant with the bifurcated market, where 70% of nuclear utilities in the world are located in the West, let's say, the OECD countries. That's North America, most of North America, Europe, a number of other locations, but that's pretty, United States, Canada, and Europe are really the primary buyers, and that's, close to 70% of global uranium demand. But there's not enough conversion and enrichment, so in the West to supply the West. So what's happening right now is Western utilities are securing conversion and enrichment contracts first. That's closer to the end product that they need, which is fabricated fuel, and they'll always secure those services first. What happens after that is demand comes to uranium because they have to buy the uranium to put through those conversion and enrichment contracts. So entities like Cameco that have been producing reliably for decades, located in the West, have plenty of clientele in the West, are seeing massive demand. So they've already signed, I think it's 60%, something like 45-ish million pounds in long-term contracts this year. And they have a lot of discussions on the table right now with utilities to sign further contracts. Now those discussions are complex, right? Because nuclear utilities, their ideal situation is to sign a fixed price contract. And so if they're shooting for 2027 to 2032 delivery, and they can lock that in at a certain price, they're going to do it because they can, not only is uranium itself, U3O8 is only at 4% of their total operating budget, it's very small, but then they know going out into the future what they can budget around with these fixed price contracts. With all of that said, producers are not wanting to sign fixed price contracts. Producers are wanting as much market reference as possible. So you'll have a traditional 60-40 contract, let's say, for Cameco, and the contracts can vary. There's some nuance, but for the sake of discussion, this is a common type of contract that we've seen in the past, which would be 60% would be referenced to the spot price at the time of delivery, and 40% would be fixed. So they might sign, a 2025, 2030 delivery, 500,000 pounds a year of U3O8, and that would be at $50 per pound fixed, and a 60% reference to the spot price at the time of delivery. So they leave themselves a bunch of upside. Now the discussions are more along the lines of the producers hold the cards now. It's a seller's market now. And they're saying, we want market reference. So these contracts are more than likely predominantly, if not entirely, referenced to the market with floors and ceilings. So the floor part of that contract kind of gets them their fixed portion, right, for the producer, not for the utility. The utility, okay, they know we're going to spend at least this, and then the ceiling says, okay, if it goes to $100 a pound, we're not going to spend more than 90 with that ceiling, whatever it might be. So the conversations are really difficult right now, and the utilities are seeing this situation. Some of them are not really believing it. They're going to draw down inventories for a little bit longer and wait and see if Russia, let's say, opens back up for their own procurement. As of now, Western utilities are not signing new contracts with Russia, but the conversion and the enrichment services have gone absolutely haywire in the West this year, and they're both up over 100% year to date. And so utilities are signing those contracts in the West, and that does equal U3O8 demand. You do the enrichment first, and then the conversion, and then you go to your U3O8. So that is coming, and when that does come, that will also move the spot price. And so the spot price isn't necessarily only moved by financial players. They're the biggest player in the market, but the two markets are inextricably linked. And so that demand's about to come. I mean, it could come in a matter of weeks potentially. I do believe this is a Q4 story for uranium.
So we're almost into Q4, and I believe you said before globally in long-term contracting, 75 million pounds has been contracted. Is that correct?
There's about 78 that have been contracted so far this year. Yeah.
78, and you've also told me before you think we can hit 100 million. Do you still believe that?
I feel confident in that number. Yeah.
So you're still very bullish.
Very. Oh yeah. I mean, the only thing that's keeping me from being 100% bullish is just the influence from the broad markets. I think is undeniable and very, very difficult to predict where things are going in the short term for the broad markets. Nobody can really accurately predict what the Fed is going to do, and I follow a number of very intelligent macro guys that are way smarter than me with broad market macro, and they have sometimes perfectly opposing viewpoints. It makes sense to me that the Fed is trying to get aggressive to get inflation under control. but I honestly think their deficits are so big, they're going to have to print money, and they're going to have to print money to help with the recovery from the recession that they're causing right now, and the money printing adds to more inflation. I think they've caught themselves in an undeniable loop, and so I don't think this goes on for much longer before they pivot. And the sense that I'm feeling, kind of my intuitive sense, just watching charts, watching markets, is there's a lot of money that wants to be long, and they're just kind of waiting for the signal. That's the feeling I get. Now, with that said, there certainly are markets that have been performing decently. I mean, you know, URNM is about flat on the year, maybe slightly down. When you compare that to some of the big tech companies and the NASDAQ and the broad market itself, you know, it's outperformed significantly. And then you've seen, you know, oil and gas just do extremely well this year as well. So there's always a flow of money. You know, money needs a place to go. And we're very much in the camp that money will go to what is working and go towards the themes of the decade. I think that's energy, and we're kind of in this nuclear renaissance right now. So the broad market, you know, until there's a meaningful, consistent move up in the price of uranium, which I believe is coming, we're probably pretty coupled to various other markets. Sometimes that's oil, sometimes it's the dollar, sometimes it's the S&P. But we tend to kind of get coupled with that when there's big moves down in those markets, and when the price of uranium is not moving, or there isn't some individual catalyst that's moving the market, the uranium market specifically.
No, you bring up a very good point about the Fed, and it shocks me how far behind the curve they are, but that's another topic for another time. Justin, just one more question before I let you go. Every time we get together, I see you sitting in this beautiful office, but I never see anyone there. Is everybody working from home?
You know, they didn't show up today. I'm gonna have to have a talk with the team. No, I do have a team. I've got about 4 people that help me. One of them appears on the webinars. His name is Rick Sachs, and he's retired hedge fund guy, but he lives in Chicago, so he's not here with me. And then there's a number of kind of back end support people. So in my office here is just me. I just like to have a larger space. I like to feel like I'm surrounded by hardworking people and activity, even if they're not physically in the space with me.
Justin, that was a great overview of the Inflation Reduction Program and what it means for uranium. And I want to thank you very much for sharing your thoughts with us today. To all of our viewers, I would remind you to check out Justin's website, Uranium Insider. He publishes the only newsletter that focuses on the uranium industry. And there is a link below. Once again, Justin, thank you.
It's my pleasure. Good to see you again, Jimmy.